Today is April 15th, 2024. The news headlines shared today are: as geopolitics worsens, why does Bitcoin, which has safe haven properties, not rise but fall instead? Affected by the sudden escalation of the situation in the Middle East, the virtual currency market suddenly crashed. The price of Bitcoin once fell below the $60,000 mark, with a 24-hour drop of more than 7%. As of press time, the price of Bitcoin has rebounded to $63,633. CoinGecko data shows that the total market value of the virtual currency market is $2.4 trillion, with a 24-hour decline of 5.8%. According to CoinBlast data, in the past 24 hours, a total of 258,000 people liquidated their positions in the virtual currency market, with a total liquidation amount of $966 million, including $786 million of long positions and $180 million of short positions. Rising geopolitical risks have roiled financial markets and prompted investors to move to safer corners such as bonds and the US dollar, while risk assets such as Bitcoin were abandoned. Cumberland Labs DeFi analyst Chris Newhouse said, because all cryptocurrencies have correlations with risk assets, small price drops quickly turned into a full-blown liquidation. Bitcoin is still up about 60% this year, partly due to the upcoming halving event, which is expected to occur on April 20th. Robi Doshi, head of markets at FalconX, said they are now seeing buyers entering the market ahead of next week's halving to take advantage of the opportunity. However, a closely watched indicator in the options market, which had previously shown investors were bullish, showed investors were starting to get nervous ahead of the halving. Kaiko Research said in a report that the implied volatility of Bitcoin options increased significantly in the past week, reversing the downward trend from the previous week. Adam McCarthy, an analyst at Kaiko Research, said that rising implied volatility usually means that market participants have less confidence in the direction of prices. When implied volatility rises, traders are usually willing to pay higher prices to protect existing positions, or speculating on potential price movements either upward or downward. The violent fluctuations in Bitcoin prices are related to a variety of factors. Iran's attack on Israel is a sudden geopolitical event that triggers short-term changes in market sentiment. Although Bitcoin is sometimes viewed as having safe haven properties by some investors, this does not mean that its price will remain stable or increase in all risk events. Here are a few key reasons why Bitcoin's price could plummet amid such geopolitical tensions. Market sentiment panic. Geopolitical conflicts often trigger widespread uncertainty in global financial markets, and investors tend to seek more traditional safe haven assets, such as gold, the Japanese yen, or US Treasury bonds. In this case, investors will quickly sell risky assets, including Bitcoin, to reduce potential losses. Although Bitcoin has shown certain safe haven characteristics in certain periods in the past, as an emerging and volatile asset class, it is more susceptible to panic selling in the face of sudden major geopolitical risks. Liquidity needs. During periods of market turmoil, investors need to quickly adjust their portfolios and raise cash to cope with the economic consequences or meet other investment opportunities. Since the Bitcoin market is relatively illiquid compared to traditional financial markets, large sell-offs can lead to sharp price drops, especially during times of greater market stress. This phenomenon is particularly obvious when market panic intensifies, and investors will choose to sell Bitcoin with better liquidity to meet immediate liquidity needs. Enhanced relevance. As Bitcoin is gradually accepted by mainstream financial markets, its correlation with traditional risk assets, such as stocks, has increased in certain periods. When global markets are generally under pressure due to major geopolitical events, Bitcoin is no longer independent of traditional market movements, but follows the price decline of overall risk assets. Although its long-term goal is to become a non-correlated asset, this non-correlation can temporarily weaken during market reactions driven by specific events. Regulatory uncertainty. Geopolitical conflicts have raised concerns about changes in the global regulatory environment, especially for assets like Bitcoin that are highly affected by policy. Investors will worry that tense international relations will prompt governments to strengthen supervision of Bitcoin and other cryptocurrencies, or affect the stability of related infrastructure, such as trading and settlement platforms, thus having a negative impact on prices. Confidence impact. Bitcoin's value depends largely on market participants' confidence in it as a store of value and means of future payments. Geopolitical crises can lead to increased doubts about Bitcoin's role as a safe haven asset, especially if it fails to demonstrate the stable performance expected during similar events. This shake in confidence further exacerbated the price decline. To sum up, market participants believe that although Bitcoin is regarded as a safe haven in some cases, when faced with unexpected geopolitical events such as Iran's attack on Israel, its price will be affected by market panic, and the collapse occurred due to factors such as liquidity needs, increased correlation, regulatory uncertainty, and confidence shock. It is worth noting that such price fluctuations are usually short-term market reactions. In the long term, Bitcoin's value positioning and price trends will still be affected by various factors such as the broader macroeconomic environment, industry fundamentals, technological development, and regulatory policies. Combined impact. I am digital anchor Amy. Okay, today's blockchain news headlines are shared here. I am a digital human made 100% by artificial intelligence AI. If you like my show, please like, subscribe, and forward my videos to your friends. AIGPU is AI technology that truly everyone can use. See you tomorrow.